Google is building its own blockchain, and they're making it for the one programming language almost everyone already knows.
Welcome back, folks. Time to catch up with the market on SoSoValue Crypto Daily. All right, let's take a look at the big picture. The market's playing it cool today, really calm and collected. The total crypto market cap nudged up just a tiny 0.12%, sitting pretty at $394 trillion. It's like the whole market took a collective deep breath. Bitcoin is holding strong, up a modest 0.32% to about $111,600. Meanwhile, Ethereum took a slight dip of 0.96%, bringing it to $4,500. Across the board, most coins are just chilling in that 1 to 2% range. No massive fireworks, just a quiet day on the trading floor. But behind the quiet market, big news is happening. First up, and this is a huge deal, Google Cloud is making serious moves to bring blockchain to the big leagues of finance. They're pushing forward with a project called GCUL, which stands for Google Cloud Universal Ledger. Think of it as a brand new Layer 1 blockchain, but built specifically for financial institutions. Now, here's the killer feature that got me really excited. It supports smart contracts written in Python. Why is that so massive? Because tons of developers out there already know Python. They don't have to learn a whole new niche language. This throws the doors wide open for mainstream talent to start building in the space. Google is playing this smart. They're aiming to be neutral and open, not a competitor to payment giants like Stripe or Circle. They want to be the foundational infrastructure, the digital ground that everyone else builds on. They've already finished integration testing with the CME group, and the chain is in a private testnet right now, with a public launch planned for 2026. This is maybe the fifth step of the magnificent seventh step into crypto and digital finance on-chain. And the institutional train keeps on rolling. Mastercard is deepening its partnership with Circle, the company behind USDC. They're expanding their program to allow settlements in both USDC and the Euro-backed EURC stablecoins. This is launching across Eastern Europe, the Middle East, and Africa starting in August 2025. This means merchants in these regions can get paid instantly, cut down on pesky transaction fees, and make cross-border payments way more efficient. Given how many hurdles exist in the traditional finance world in these areas, this pilot could be a game changer, showing the real-world power of stablecoins in a massive way. This isn't just theory, it's real utility hitting the ground. Now, for a little bit of market drama. Whoa, did anyone see what happened with XPL futures on Hyperliquid last night? The native token for the Plasma project went on an absolutely wild ride, surging over 200% in just 2 minutes. That kind of move triggered a massive wave of trading and a brutal liquidation cascade. Open interest got slashed from 160 million all the way down to 30 million in 10 minutes. It was pure chaos. Some huge traders made out like bandits. One reportedly snagged $16 million almost instantly, and another nearly $25 million. But on the flip side, a lot of smaller traders got wrecked. In response, Hyperliquid is stepping up. They've introduced new risk controls, like a cap to prevent prices from swinging more than 10 times their 8-hour average. They're also bringing in external price feeds, similar to what Binance uses, to keep things more stable. It's a tough lesson, but it shows how the ecosystem is learning to build more robust systems. Finally, let's shine a spotlight today's standout performer, Solana. Sol has been on a tear, rallying over 5% in the last 24 hours to hit a peak around $208, easily outpacing the rest of the market. Some analysts are calling it a catch-up trade for people who feel they missed Ethereum's big breakout from $1,400. There are 3 key things fueling this rally. First, a technical breakout on the charts. Second, we're seeing increasing demand from institutional digital asset treasuries. The big money is buying. And third, the ever-present speculation about a potential spot Solana ETF getting approved in the US. Adding fuel to that institutional fire, a company called Chorus One just launched the first-ever institution-focused Solana validator node. This is a custom-built, super secure setup designed specifically for large, compliance-focused clients. It's basically a VIP on-ramp for big institutions to get deeply involved in the Solana ecosystem. Keep your eyes on Sol. That's a wrap for today's update. Catch you tomorrow. Same time, same place. Cut through the chaos. Focus on what drives the crypto market. Stay on top of crypto research, all in one place at SoSoValue.com.